The Nifty is now up 126 points. So big bang opening on the Lao Street.
Currently, the benchmark indices are up close to about 1%.
Markets are looking very strong. We have Nifty sitting with gains of 180 points.
Sharp fall actually. From at 228 or so, the market was at 17,483 and we're at 17,445 now. So that's a 40-point fall. 176 points on the Nifty. We're at 17,490.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Bulls continue to reclaim lost ground as strong global cues lift the Wall Street once again. Sensex gains over 500 points. The Nifty gains nearly 200 points. PSU banks lead the charge. Invesco is not the largest shareholder in Z anymore. The US-based fund house sells 5.5% of its stake via block deals, mops up close to $170 million. Around 5 crore, 29 lakh shares change hands. The Z stock jumps 6%. TVS Motors powers up to a new 52-week high as brokerages turn bullish on its volume performance and its leadership in electric vehicles. PSU Bank Index rallies 4% after brokerages bet big on Canara Bank, Bank of Baroda and Indian Bank say they are better placed as asset quality is healing and balance sheets are looking better. In stocks and news, V-Mart gains after it buys Lime Road. Adani Transmission rallies after its second quarter operational update. Can Fin Homes also gains post a decent set in Q2. Okay, so those were all of the top stories that we're tracking this evening. Here's a lineup of what we have in store for you. It's a packed show as always. In Market Voices, we have Tushar Pradhan, CIO of HSBC Global AMC, talking about private banks and its valuations. And in big corporate voices this evening, we have Lalit Agarwal, who is the founder and MD of V-Mart Retail, and Girish Kosugi, who is the MD and CEO of Can Fin Homes. All right, those were all of our top stories and what you'll get to see in the next 30-odd minutes. But let's start with the day's market action. The recovery continues on the Wall Street. Positive global cues boosted sentiment once again. Sensex gained over 500 points and the Nifty gained nearly 200 points. Mid-caps managed to outperform the blue chips. Nifty Bank gained nearly 400 points with the PSU banks leading the charge. Prashant Nair is here with the details.
Strong session overall, nothing to complain after the strong handoff that we got from Wall Street. It's been very volatile. Global markets 2% up, 2% down. And then last night, of course, out of the US, you had another 2.5% higher move. But good close. The star of the session really was the PSU Bank Index, which now this week is up 8%. Names like PNB, SBI, Canara Bank, Indian Bank, you name it. That was really the flavor of today's session. But apart from PSU banks, media as a space did well. Z, of course, is a big contributor. Real estate, which has been coming off last few sessions, picked up pace, and the consumer index did quite well. SBI, naturally, on the Nifty was the top gainer. There were Adani Ports, Eicher, Nestle, ITC. As I said, consumer has come back into flavor. Reliance participated as well, and I think that it was a big constituent, big help for the broader index. Broader markets, even better as compared to the Nifty. Defense as a space has been doing well. There's a Defense Expo which is going on as well. HAL, BHEL, data patterns, a few. TVS Motor did well. You had Polycab, Adani Wilmar, Adani Transmission. The recent listing, Electronic Smart, is at a new high. Gujarat Alkali, NHPC, Phoenix. I can go on, but just highlighting the big volume-led movers that we had. The Nifty has closed exactly at the 50-day moving average, the simple 50-day average, and I think that becomes the first stop, the first level to really conclusively take out when we return tomorrow. There is no important data out of the US which could kind of, throw a spoke in the wheel. So hopefully the market in the US may continue to do well, which provides additional tailwind to the market here, which in any case has been doing relatively better. And I think markets will also closely watch central bank action in the UK. Whether they, as the Financial Times reported during the Asia session today, whether they are actually postponing the quantitative tightening program, not just because it's important for UK, but as a cue of what may possibly happen around the world later this year. Back to you.
Okay, all right, Prashant. Thanks very much for that. Let's get you some expert opinion now. Tushar Pradhan, CIO at HSBC Global AMC, said that the earnings story in India is pretty solid. He added that private sector banks have done well due to technology and the ease of banking that they offer their customers.
Predicting pretty significant earnings growth for this quarter as well, and in fact for the full financial year. So I think the dark clouds that we have seen in the Western world and the markets as we speak have caused us to believe that earnings will not follow through. But I think the earnings story is pretty solid for this year. What brings to mind then is that will this be followed up for next year? And I think that is really where the confusion is. How long will the higher interest rates survive? Will it snuff out the capital expansion that we are talking about, which will happen? Or will the rates which have gone up in India not really be so substantial to be able to really snuff out the recovery that we are talking about for next year? The private sector banks have done well for the reasons that we all know, that they bring technology, they bring ease of banking, ease of business to customers. Customers tend to like that. The kind of expansion that they've seen both on the liability side as well as their ability to attract more customers is the testament for where their market valuation is going. The innovation by which they approach newer customers and the ease at which people can be lent to is something which a lot of the public sector banks need to catch up on. If any significant company turns around, invests dramatically in technology, matches step for step what the private banks have been able to offer its customers, I think you've got a gold mine.
Okay, let's get in some more opinion then. Matt Orton, who's the chief markets strategist at Carilion Tower Advisors, said that India and Latin America are good markets to invest in. He added that IT and financial stocks are outperforming in India.
The fundamentals are still, I think, in the favor of long-term upside for the overall market. The challenge is that the macro headwinds are just incredibly pervasive right now. Look for really, really compelling valuations. The small cap part of the US market, I think, makes a lot of sense. For global investors, I think emerging markets, which have sold off really hard, make a lot of sense. Focusing on India and Latin America, I still like both of those a lot moving forward. I think a lot of bad news is already in the price. When you look at, particularly in IT services, valuations have come off significantly over the past year. And what's encouraging from India is that you're seeing IT start to outperform. You're seeing financials and banks in particular outperforming. So you're seeing those, I'll call it stocks that haven't been part of the momentum trade for a while, start to work again, which is really, really encouraging. I think banks have a lot of room to run. Net interest margins are more constructive, and at least the difference between loan growth and what they're paying out on deposits continues to increase. So I think that sets up for a really, really good backdrop for the banks.
All right, well, let's get to the second story this evening. Zee Entertainment ended the day close to 3% in the green after Invesco sold 5.5% stake of its over 10% stake in Zee via a block deal. A lock-in on further sales and optimism over the merger with Sony fueled a rally in the stock. Nimesh Shah is here with the details on this.
Zee is one of the big gainers in today's trade, and not surprising. You know, the couple of reasons why the stock is window. So there was absolutely no slippage in the block. I still don't have the color on the book, which means there are not enough details on who the buyers are, and that will be the next important thing to watch out for. Maybe the disclosure will come today evening, so that's something to watch out. The other reason why the stock is doing well today is the fact that now there is 180 days of lockup for Invesco. See, Invesco was holding 10.5% and 1.5%, and they were sold 5.5%. So they left with 5%, but this 5% can only come now after 6 months. So there could be no further supply. And in the 6 months, there is a very high possibility that the new entity will get listed on the exchanges. Post that, any which ways the Invesco stake will further go down because the equity base is going up. So, you know, there is now no further supply coming in from Invesco, at least for the next 6 months. And the fact that the block happened in the block window is leading to a big surge in Zee Entertainment today. As I said, the disclosure in terms of buyers will be important. I don't have a color yet, but the two big reasons why the stock is up today. One, it happened in a block window, and the fact that now there is a lockup for 180 days for Invesco.
Okay, all right, Nimesh, thanks very much for getting us that big story. Well, let's move on to the third story that we're tracking then. TVS Motors powered up to a new 52-week high after it rallied 4% as brokerages turned bullish on the company's volume performance and its leadership in electric vehicles. Sonia Shenoy is here with the details on why the stock went up in today's trading session.
Well, thanks a lot for that. So TVS Motors hit a fresh high today. The stock, in fact, is the strongest auto stock. It's up 74% in 2022, while the Nifty Auto Index is up just about 14% this year. So there's a clear outperformance that we've seen. Now, TVS Motor is the only two-wheeler maker to substantially expand its presence in all high-growth categories over the past decade, and hence the outperformance in the stock. So we decided to do a deep dive and take a look at the market share gains that TVS has seen over the last 8 years in several categories. Let's start with the premium motorcycle segment, the 150 to 250cc segment. TVS Motors market share has risen from just 12.3% way back in FY15 all the way to almost 26% in FY22. Now, this market share gain in the premium motorcycle segment was led by a very strong performance by the Apache brand, and TVS last year also launched the Apache RTR 160, which has seen a great response. Let's move on now to the scooter segment, where they're not too far behind in terms of gains. Way back in FY15, they had just 15.2% market share, and now it's at 20% due to the success of two of their brands, the TVS Jupiter and the N-Torque. Of course, they've gained quite a bit of ground in the electric vehicle space and in the export market as well. So let's take a look at the export market motorcycle share. Now, that was just 13% of the industry exports came from TVS Motor way back in FY15. That has gone up all the way to 25.1%. And, that just goes to show that, the margins are higher in the export market, and hence realizations for TVS has picked up as well. And that has helped with the overall margin picture coming in at 9 to 10% plus. But how are the valuations stacked up, you would ask? It's not too expensive compared to its 5-year average. So TVS Motor currently trades at about 29.4 times FY24, and the last 5-year average is 28 times, and hence perhaps the stock is continues to gain ground. Back to you.
Okay, all right, Sonia, thanks very much for that. That's on TVS Motors. But let's shift focus to the mid-cap IT space. L&T Tech came out with its second quarter numbers and it beat expectations on all counts. Profits came in 3% higher at a little over 282 odd crores versus 274 crores in the previous quarter. Rupee revenue surged 6.5%, while the dollar revenue also came in 3.2% higher than the previous quarter. The company also declared a dividend of 15 rupees a share. All right, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories we're tracking this evening.